afternoon and then into the second half of the week. This is the second morning that we've had in a row where we've had the 20 handle, which is the entry to the gap fill, act as not only an entry to the gap fill, but into the continuation of the trend. And that is because the VIX is inside of a series of long setups inside of its longer term, what we refer to as the VIXplosion support levels. We have, for the last couple of weeks here, been witnessing the defense of our old contract lows to our new contract highs. And Tuesday, we had our 61.8% line of our daily long defend its support level. And then again, that led us into the gap fill. And then this morning, we had our 61.8% line from our lows of the week to highs of the week defend in correlation with the 20 handle. And then that target is not yet complete yet. It has a target of the 2057. The inverse of the target on the ES is the 6853 down below us. So again, we had this neat little head and shoulders pattern right at the 20 handle. Again, in the morning, very similar type of situation to the pre-market timeframes yesterday. And now what we're watching for here is, we could trade another new traditional here before we run into that larger target. If we did get that opportunity, the resistance level would be the 69.1425. Now I'm going to do some backtracking here and talk about the leading indicators in a little bit more detail. The DXY chart continues to strengthen here. And why it is important to understand the dollar's current trend is because the correlations right now are neutral on the indices. So we're expecting them to have no influence on the S&P, the Dow, the NASDAQ, and the Russell. Although after today, these slightly positive correlations are going to turn less positive on the Dow and the Russell, and the negative correlations are going to become more pronounced on the S&P and the NASDAQ. We still have a negative correlation on the Aussie dollar, the euro, and the British pound. And of course, we still have negative correlations on gold, silver, and WTI. The dollar weakness trade that we have witnessed here so far, there's been very little dollar weakness. And despite that, the crude oil, gold, silver rallies have been very strong and have continued to defend front runs of pullbacks from our lows of the week to highs of the week. We would expect that as long as the dollar, if the dollar still has room to make this pullback, it's just going to get more bullish potentially for those negative correlations, the euro, the pound, the Aussie dollar, gold, silver, and crude oil, if we start to make this pullback. The bullish above line in the sands, the 96,385. Going back here to Bank completed a profit target. I'm going to zoom out here for a moment because you have to see this from the longer term perspective, that the long setups that we were in were drawn from the lows of the year to highs of the year. Now, we also completed a profit target from 2025's lows to highs. So it's interesting that there's an extension long level from our previous highs of 2025 to highs inside of the financials, but there's also the next measured move long in our series. And what is interesting about those are two separate setups on Bank, but they're almost on top of one another. And what that gives us is the potential for a continuation of the trend. It also represents where if we were to fail that extension, the financials are giving us a clue as to potential, a contributor to downside risk. Right now, in the intraday timeframes, even though we're coming out, this stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.